First, I'd like to offer you a bribe to watch this video all the way to the end, all of about 9 minutes. If you do, I'll give you a free special gift, one that you will definitely want, worth over $32. So please watch to the end. Now, let's assume the following choices are at no cost to you. Would you rather have 2-day-old Simon or fresh off the grill filet mignon and Maine lobster tail with baked potato and steamed veggies? Would you rather drive a 1990 rusted out Toyota pickup with no air conditioning or a brand new all-electric Mercedes-Benz? Would you rather have a jacuzzi bath and full body massage or have a heavyweight MMA fighter use you for punching practice? Well, I don't know about your food choices might be, but for me, I'll take the filet and lobster tail every time. I don't know about your emotional attachment, what it might be to older automobiles or how you feel about the new EV offerings, but I'm pretty sure we would all want or choose a nice, relaxing jacuzzi and massage over being pummeled by a pro fighter. Yeah, good grief. Okay, aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the last several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. If you find this to be helpful, please like this video and subscribe to this channel. Okay, now those comparisons that I used may not be perfect, but let's take a look at another scenario that's actually a choice people make every day. Option 1, you give your money to someone to hold for you whom you do not know, who promises to protect your money and help you to grow it and to give it back to you whenever you want, all or part of it. And that person charges you a monthly fee to hold on to it for you and another fee whenever you ask for some of it back. And in spite of the promise to help you grow your money, well, that person uses your money to invest in various things such as real estate and lending to other people, making 10 to 50% gains with your money. They pay you such a small amount of interest that you're constantly falling backward and losing value to inflation. Or option 2, would you rather put your money into the purchase of a guaranteed money multiplying asset that you have control of with no downside risk and that pays you a guaranteed interest and dividends that you can access and leverage anytime you want without losing money to fees? And while you don't know this asset company personally, they have a documented history of over 100 years showing their success and reliability. Which option will you choose? It's interesting and honestly quite baffling to me that most people consistently choose option 1. I'm convinced that the reason people choose option 1 is because they don't know the truth about either option, and most have never been informed about the various and valuable aspects of option number 2. You may have guessed that option 1 is all the commercial banks. Now, I kind of put an unflattering spotlight on banks with my description, but the reality is it's actually worse than what I disclosed. You know, the main reason banks carry federal deposit insurance, otherwise known as FDIC, is because they are allowed to practice fractional reserve banking. You can look that up, Google it. That simply means that they're only required to maintain 10% of the money they have on deposit, your money, as liquid reserves. So what do you suppose would happen if just 20% of the depositors were to demand their cash in full from your bank? Well, they wouldn't be able to deliver on their promise to give you your money on demand. And that's essentially what happened to those banks that recently failed. And that's what happened during the Great Depression. Another dangerous practice banks routinely do is to loan your money to investment banks and other investors who pour your money into risky investments. And when they fail and those loans get defaulted on, well, good thing for FDIC, right? But only up to $250,000. If you have more than that deposited with your bank, well, just remember that only $250,000 of it is covered by the FDIC. Now let's look at option number 2. That is whole life insurance with a mutual company and that participates in dividends from the profits of the insurance company. Whole life insurance is absolutely a money multiplying asset. When you buy whole life insurance, you're buying dollars for pennies. That is, you are guaranteed that the most you will pay for a whole life policy will be transformed into 2.5 times or more money than you paid for it when the benefit is paid to your beneficiaries. And that benefit is paid out tax-free. And if you should die anytime before paying that last premium for the policy, what you paid will be multiplied several times as the benefit to your beneficiaries. That's just the beginning. As you pay premiums for that participating whole life insurance, it produces cash value component that begins earning dividend interest, which is compounding and becomes available for you to use as leverage for taking policy loans. There is simple interest charged on those loans, but when your policy is with a company that pays higher dividend interest than the loan interest charged, and that has a non-direct recognition policy, you're essentially getting free loans. And in fact, you're still earning more interest than you are charged for the loans. So you lose nothing when using your money for leverage and you continue to earn compounding interest. A couple more benefits that make these accounts really outshine any bank savings is, first of all, the interest earned on your cash value is tax-free, and you leverage it without triggering any taxable event. Not only that, but the interest that you pay on those leverage loans may be tax deductible depending on what you use them for. Now, when your whole life policy is designed properly, it will provide cash value right away that you can leverage and grow at an accelerated rate, way better than any bank savings account. The strategy for getting the best use and benefits from these participating whole life insurance cash accounts is called infinite banking. And the enhanced hybrid strategy that we teach and coach our clients in the use of, we call tax-free cash growth warehouse strategy. It's based on the infinite banking concept and incorporates cash flow principles and sweep strategies. We have a 60-minute free webinar on this channel that gives a full overview of the strategy and benefits. And we have over 100 short videos here that answer all the most common questions about the strategy. Now I have a special offer for you. It's a free offer worth over $32. And I've written these 2 books about this strategy that explain everything you need to know in order to get going with using this strategy for your own benefit. They're available on Amazon.com for $15.95 each. But for you, because you watched this video all the way to the end here, I will give you both books as PDFs that you can download to your computer and read at your leisure, absolutely free. All you have to do is go to our website request page, The link is right here below this video in the description box. But when you get to that page, in the additional comments section, you have to type both in there, or I'll only send you the one book, which is a great deal by itself, A Tax-Free Cash Growth Warehouse, 178-Year-Old Secret. But right now, you can get them both free. So don't hesitate. There's no catch. Request your books now. Remember to type both in the additional comments. We're here to help. We look forward to helping you. So for now, aloha and mahalo for watching.